Welcome to day 81 of me backtesting my way to success. First trade was a win, and the reasons why I entered were this daily order block right here, the volume area that you can see right here from somewhere in the past, and then I entered on an impulsive move, which was also a breaker structure away from the volume area, which was right here. Stop loss was above the liquidity area from right here, with actually a lot of breathing room. And my take profits were number one, the daily open, and number two was at the next volume area. Once my first TP was hit, I moved my stop loss to the break even, which was a good thing because it seems like I'm going to get stopped out soon. But of course, I might have also just missed getting my second TP hit. But you know, I'll rather miss my second TP than and getting a break even than getting stopped out because I was too greedy. And so let's just see how the next trade goes. Next trade was a loss, and the reasons why I entered were equilibrium from the swing high to the swing low, this 30-minute fair value gap that perfectly matched with the golden zone, then this volume area, and I entered on a break structure impulsive move away from the volume area. Stop loss above the golden zone with a little breathing room, which seemed to be not enough. My take profits were number one at this volume area, number two at the swing low. And yeah, like I said, I think it was because my stop loss was too tight. Bit more breathing room and then it would have been fine. But then I probably only would have placed one TP and it would have been at the swing low because the risk reward ratio would have been too bad had I placed the TP at the volume area. But yeah, I get stopped out, so that's that. Let's just see how the next trade goes. Next trade was another win, and the reasons why I entered were equilibrium from the swing high to the swing low, this daily fair value gap that you can see right here. And then I entered on a break structure away from the volume area, and which was right here on this candle. And because this was not really a impulsive move, as it was right here at this area, I gave it a lot of breathing room above the fair value gap. And my take profits were number one, the weekly open. The weekly open right here, as you can see. And there was also the volume area that fit with the weekly open. I think it was actually exactly of the open from here to right here. Yeah, it was actually the consolidation, the volume area of this consolidation right here. And my second take profit was at the swing low, which was also at the volume area right here. I marked it in a different color because it's a stronger volume area since there are multiple consolidations and they have the same volume area, or they have the volume area at the same place. And I think what I can learn from this trade is to be patient because, as you can see, I entered right here, and I think that was way too early because if you take the Fibonacci from the swing high to the swing low, and then you can see inside of the golden zone I could have entered, and then I probably would have entered. But let's see on a good break of structure. Really good break of structure right here. Stop loss above it. Take profits would have been the same. And it already looks way better. And as you can see, after my first take profit was hit, I moved my stop loss again to the breathing room because, bro, my emotions kicked in so bad. It was horrible. Just seeing that upward movement, I almost moved my stop loss again, and I thought I was finally away from that, but it seems that I'm still kind of too emotional while trading. And so that's already it for today's episode. We'll see you on the next one.